close above this inversion fair value gap. We'll come down and touch it. That's an entry for me. We have a breakaway gap down here, reaching towards buy side liquidity. 2 seconds left. 15-minute, coming out of a 15-minute BISI here. Okay, that didn't close above it. Bring this one back. This is from earlier. That's the high of previous day. We are inside of the 150 macro. 15 seconds left in that candle. 10 seconds. Close above this open. I'll put it at the top of this open or inside of this fair value gap here. Okay. Enter. Stop loss. 12 handles. Take off one contract at the 20 handles. That's what I opened up to. So a potential breakaway gap. We have sell side liquidity taken inside of the 150 to 210 macro. We have a down move into sell side to this high here, into this open fair value gap. So taking this last leg, have a SIBI and premium. We also have the SIBI that sent price down into sell side, which could be a more modest fair value gap to wait for inversion. But the one we used satisfies the model. Let me draw this out anyway. See how we came in, we wicked above it. But SIBI in premium, closing above it while leaving a breakaway gap. I enter at the top of the inversion fair value gap, target 20 handles, stop loss at 12 handles. A little bit higher time frame. We are inside of a 15-minute BISI. After closing, it's a little bit above midpoint of this, bearish order block. I'm gonna look at the midpoint of this order block. These two down close candles here. 21, 228. Watch that level on the 1 minute. Small busy up in here. Stop loss is inside of this breakaway gap, so we don't want to see that field. So it's good entry placement right at the top of this fair value gap. 12 handles puts us right inside of this breakaway gap. It's an invalidation point. We reach into that level, then wouldn't expect to run up here. Might want to sweep this low again if we reach down into here. So I can let the stop loss work with it being in a good position. Good entry, good stop loss position. I'm not worried too much about this down movement. Either we gonna follow the model or we get stopped out. Either way. Touch the low of this gap. 201. Let's watch the midpoint of this wick. See where this candle closes. Close below this gap here. Coming back up, touching this wick. Got a small sibby here. This is the last line of defense here, this wick, before we reach into this fair value gap. So we're watching this candle. We came up. What's the low of this? 224.75. So one tick up under. That means threshold. Closed at the low of this candle. Came wicked up into this sibby. Now let's see. Might want to just push down from there. If not, we should see a respect to this. Busy. See, went right down to the low of it. It's above this SIBI. Inverted it. See if we can create a SIBI of our BISI going up. That'd be nice order flow. Came back up into this reclaimed fair value gap now. It's a SIBI. Missed the midpoint of it. Started to fall. Coming down. Inside of this SIBI here. Came back up in this to the SIBI one more time. Pushing lower again. I think we're gonna it's gonna wanna take our stops. First candle closed below this BISI here. The following ones, the bodies are respecting it, but I don't really trust it after that first candle closed below it. Otherwise, this will give me more confidence that we do want to push up. But let's see, we failed to reach this midpoint. So we see what this candle doing right now. We inside of this wick. So if we see rejection from here, that's just further bearish order flow or resistance. Get a measurement of this wick. Okay. Get rid of this. $207. Entered at 155. I can let my stop do its job because that's a true point of invalidation for me. This idea of it going above these equal highs. This would not be a breakaway gap to me, or a clean breakaway gap, I'll say. Some breakaway gaps you can tap into, but this wouldn't be a clean breakaway gap for me to take above this inversion fair value gap. So we're just consolidating around this area. See how we wicked beneath the midpoint of this wick. All right, we touched the midpoint. Still in drawdown. See if we can close bullish, then see how we react on this down close candles. We actually closed above the midpoint, which is a good sign. Closed above the consequent encroachment of this inversion fair value gap. Let's see if we respect this down close candle. It's pretty choppy. Came down, touched the bottom of this fair value gap again. You can see that. Did close above the mean threshold with this order block. we working this order block here. It's choppy delivery. Came close to the stop loss down here. Got bodies in the lower portion of this inversion fair value gap. See if we want to close above this down close candle. And maybe the high of this inversion fair value gap. I did not expect to still be in this trade. I was looking forward to find some support off of the top of this fair value gap, or at most way down into this BISI, continue higher, close above here, use that for support, take us above these highs, drawn towards the old daily high, and an older high be above it, but at least in this direction. Let's take 20 handles here, and then see if we can get to here, watching for bullish order flow. Instead we came down, disrespected, well, came down below the inversion fair value gap and could be potentially using it as its intended purpose to send price down as a SIBI, which will take us from here to here. If it wants to send price down lower. So it's only inversion if we come up above it. We're back down in this very small BISI or fair value gap. Just created a volume imbalance. Close, and then price opened up. The price lower. Created a little volume imbalance inside of this BISI. Right now we're trading above it. So I'm gonna watch the bottom side of this order block. This order block here. See what we want to do with that. It didn't immediately go down from this candle. I was watching to see if this touch wanted to send us down below this low. Created this volume imbalance inside of it. So we're closing candles above it. Now let's watch again. It's down close candle. Create this gap here. That'd be good. That'd be good for a bullish scenario. Come down in this BISI, touch this order block inside of a discount. That'd be gravy. We just tapped into it. That could be enough to send it higher. Let's see if it want to come back down to the midpoint of it. Maybe this opening price there. And this is the benefit of good placement. Set my order limit right at the height of this inversion here. And I'm using a strict 12 handle stop loss. So if I was a little bit higher, the stop would be higher and I would get stopped out here. But at this point, I would want to see it close above this gap to really feel confident because there's so much back and forth, back and forth. You know? See, we came down, touched the bottom of this gap. Now let's see where we close in 5 seconds. Closed above the midpoint of the gap. Draw this. And the midpoint of the gap, coincidentally or not, is the low of this fair value gap. Closed right at the high of it, came back, touched the bottom of this BISI, opened, and came down and touched the bottom of this inversion fair value gap. Came and wicked above this high, these equal highs, boom, wicked it. Same high as this candle. So algorithmic signatures. Close right at the high again. Open. See if we stay above in this upper half of this gap, which is like the midpoint of this down close candle. Want to see it push higher from here. Came down. We've been underwater this whole time. Down here, watching these PD arrays and these levels for support. Slowly, slowly, started respecting them. Going higher, disrespecting SIBIs and bearish order flow, disrespecting it higher. Came and look. Okay. Touched the bottom of that higher inversion fair value gap. I'm gonna recategorize this. Came back down, touched this opening price. Boom. That down close candle. I got you. I got you right here. See that? Touch the bottom of that. Right to the tick. Boom. Sharp move down. We came back into this little small BISI here. That's what I'm saying. It's choppy. PM session. Let's back up. See what's going on in that New York session. I wouldn't call this a huge range in the morning. It was decent. But on a daily, we could be hanging around because we creating this busy here on the daily that's overlapping with this old high. Breakaway gap down here. Came back, rebalancing this busy. Came and touched the everything's fractal. Same thing we was doing on the 1 minute. We doing on the one daily, on the daily candles, daily chart. Opening price, came down, touched it, boom, started going higher. Boom, closed above this inversion fair value gap on the daily time frame. So now, this day that we are in, Tuesday, this could be just chopping around because it wants to stay in this vicinity. So Wednesday, we might trade down into this inversion fair value gap, touch it, and then, have big moves higher using the news for Wednesday and Thursday. So we might not get much movement, especially PM. We already moved around a couple times in the morning time. So from here to 4 o'clock, so you seeing all of this coming back. We go all the way up to this inversion fair value gap and come all the way back down towards the bottom end of this range. So could just be potentially be in this area for the rest of the day. He probably 3 o'clock, maybe it'll push up here, come back down for 4 o'clock, somewhere in here. Look at ES. See, ES finally got back up to the midpoint of the opening range gap. NASDAQ did it this morning. So ES finally got back up there. You see how it touched it? Wicked above it. Start breaking down. It's the algorithm. But on the contrary, ES also, ES was in a pretty range. It was a small daily range yesterday. But ES got down to the midpoint of the yesterday's range, equilibrium. NASDAQ did not. It was farther to go on NASDAQ. NASDAQ. Yeah, we can get down to yesterday's equilibrium and still have a daily basic, I believe. A small one. I don't think so though. It's a 5 minute chart. I could close it here because of what I said, that it's really not likely to do a lot of movement. But experimental purposes, you know what I will do? I'll take it down to one contract. That's what I'll do. Take it down to one contract, and I will let my 20 handle target be I'll let my model play out. Okay, see what we did here. Closed above this inversion fair value gap after coming down and touching the midpoint. So closed above the halfway point, came back down, touched it, boom. Closed above the inversion fair value gap high, opened, came back down into this high, higher, went straight to the midpoint, closed in the lower quadrant. It's kind of overlapping this midpoint of this wick, so we'll see. We got a volume imbalance here, volume imbalance there. Could get some fast movement through this high. Large range candles. Those volume imbalances saying that it's starting to get into a rush. Trying to hurry up and get somewhere. If I did have the two contracts on, I would take it a partial above this high. But if we get above it, I'll just move to break even. Move my stop loss to break even. Just close above the inversion fair value gap. Come down and touch the high of it. We want to watch the midpoint of this wick. We could be looking at an immediate rebalance, crossing over this swing high. Instead of creating a fair value gap, to create an immediate rebalance. Could take off from here. Not to mention these volume imbalances. And because today is as choppy as it is, That doesn't change my mind. Look how many times we visited this. Let's see. Looking at the midpoint of this range, which is the high of the lower inversion fair value gap. Looking at this opening price here, down close candle. Looking at these bodies, came down and touched the high of this lower inversion fair value gap. We got a bearish SIBI here, down close SIBI. Close above that, that would be bullish. I want to see it close above this SIBI if we want to go higher. It's right at the high of it. Let's see, the low is 21,240.75 right there. The close of this is 21,240.75. Yep, exact same price. It closed right at the low. Boom. Came down, touched the top of this inversion fair value gap, showing higher. Got this volume imbalance here. Creating this busy right at the upper portion of this inversion fair value gap. We come down into the midpoint of this inversion fair value gap again. I can see that. See, we're in profit about 7 handles. Went through drawdown for 150. Like 40 minutes. It's a long time. Swept this high. Let me draw this out. Midpoint of this wick. That's midpoint. 21,244.75. we are reacting off of it right now. Come down and find support. I will want to see it. Find support in this upper half, upper portion. Got a swing low here. Strong move through this buy side. Move my stop loss. Up, closed. I would take a partial off here if I had a position on, but I closed it down closer to break even just to have one position because of all of this chop. Watching this down close candles for support, and then the upper portion of this inversion fair value gap, like I was talking about. Touch down to the top of the inversion fair value gap at 21,240 and a quarter. Time is at 2:45. Walking in on the 250 macro. We got equal lows down here. Just took buy side. I'm gonna let the trade play out though. Because even still, I want to see support in this area. And if I don't see it, my stop loss is down here close to break even. And I want to see this support because we took this high. So before we took this high, my stop loss was still where it was from the beginning. also came into this SIBI over here. Which sent us lower. But if the draw is the high in these highs here, then we can find support here and just continue higher without needing to take these lows yet. But it's well within its right after taking this buy side, these equal highs. Boom. 250 is coming up. But I'm committed to letting the trade play out. See how we came tapped down beneath the inversion fair value gap? We still closed above it. That's still showing support. If I see closes below the midpoint of that inversion fair value gap here, then that would be a bearish signature. But this is a good sign here. Strong candles. Bodies respecting this inversion fair value gap. Watch how these candles close. Created a bullish fair value gap here, overlapping with the midpoint of this wick. Down close candle here, price open, came down, touch the old high, boom, algorithmic, boom. Closed above the high. Strong candle into the target. Reaching up for this high for buy stops. Breakaway gap still intact. And if we would have waited till we close above this inversion fair value gap the first time entering the trade, that would have been our entry. Stop loss would have been down here. Target right above the daily high. I might have moved it to the daily high, but I'd left it at 20, stagnant. Let's see if that target would have been reached. Create a fair value gap. And again, we see those volume imbalances. The gap between the bodies getting closer to a target. Got this busy here. Got these two down close candles. They could be used for support. Let's look at the midpoint of this order block here. It's bearish order block. Midpoint, body to body. That's what we're reacting off of now. Find a little support. Bingo. So this trade as well after the close above this gap. Turn back to the top of it, entering there. Stop loss, 12 handles. Target, 20 handles. It was a go. So my entry from the 150 to 210 macro closing above this inversion fair value gap, breakaway gap below in the premium of short-term range. Endured about 40 minutes of drawdown, choppiness, 2 o'clock to 3 o'clock. Pushed higher, closed above the upper fair value gap in a larger down move range from closer to 130. Found support in the inversion fair value gap. Took buy side liquidity. Came back down into the inversion fair value gap midpoint. Body support in the high. Pushed higher to the previous day's high. With today's high above it and an old high above that for buy side liquidity, buy side targets. Let's see, we already in the 250 macro. So I'm thinking at 3 o'clock in the day macro just take us back down into the daily range. Keep us within the narrative that we create now. Third candle in a busy fair value gap. We might want to run down below tomorrow on Wednesday. I just see how it reacts to down close candles while we inside of this buy side liquidity.